Hey there traders, this is Steve Miley, the market chartist for FX Explain, and our regular weekly macro watch update for the week commencing the 17th of January 2022. Stocks trying to rebound despite still more hawkish Fed. Let's take a look first of all, as ever, at the main macroeconomic and geopolitical developments over the past week. We're going to kick off by looking at that 2022 was really seeing a continuation of the latter 2021 theme of rising concerns of global inflationary pressures. And this was highlighted this week by the release of the US CPI data for December, which showed a 7% rise over a year, the highest inflation rate since 1982. The more hawkish tone from members of the FOMC has seen interest rate markets start to price in 4 rate hikes from the Fed this year, 2022. And also, Lyle Brainard, a Fed dove, has affirmed a more hawkish tone, whilst Governor Christopher Waller has highlighted there could be as many as 5 rate hikes this year if need be. Earnings season kicked off this week in earnest on Friday with the financial sector, with JP Morgan, Chase and Citigroup slightly disappointing. Now let's take a look at the global financial market developments for last week ending the 14th of January. While stocks were lower in here, they did stage a rebound after a big sell-off on Monday, lower again on Thursday and trying to rebound again on Friday. Tech sector, US indices leading the market lower, tech sector leading the US indices lower, and here the Nasdaq still looks vulnerable, but does also look like it's still trying to build a base and hold on to a still more bullish tone that we've seen obviously over the last few years post the pandemic sell-off. US yields spiked higher in early January, and we did get a consolidation last week, but a pushback to higher yields on Friday has continued to reflect the ongoing pressures of higher yields given the potential higher interest rates we're going to see around the globe going into 2022, and also reflecting inflationary concerns. The US dollar was broadly weaker in here over the last week, with the euro breaking out to the upside, and we've also seen US dollar weakness elsewhere against the commodity currencies, with US dollar Canada breaking lower despite a rebound at the end of the last week. Gold is reflecting a more positive tone overall in here, did rally in here over the past week and consolidated at the end of the week. This more positive tone echoing the weakness in the US dollar. And we've also seen oil continuous upward march in here, pushing up to multi-month highs and getting close to peaks here on the continuation chart seen in the second half of last year. And copper did break out to the upside, did lose some ground at the very end of last week on Friday, but breaking out and signaling a more positive tone within a broader range environment. Now let's take a look at the week ahead, the week commencing the 17th of January 22. Well, we have the US MLK holiday on Monday the 17th of January, which sees US markets closed. And we're going to continue to monitor the economic impact of the Omicron variant of COVID-19 as it continues its widespread move through Europe and into the US. On the central bank side, we get the Bank of Japan in action on Tuesday, and on Thursday we see the PBOC, the People's Bank of China. We've also got earnings watch coming up, so we've got Bank of America, Goldman Sachs, United Health, Procter & Gamble, ASML, Morgan Stanley and Netflix all reporting this week. And just running through what we've got on the major economic events, we've got Chinese GDP and industrial production Monday, that BOJ interest rate decision Tuesday, UK employment report and the German ZEW survey also Tuesday. We get UK inflation data on Wednesday, including CPI, alongside German and Canadian CPI data. Thursday, we also get EU CPI. Before that, the Australian employment report and that PBOC interest rate decision. And on Friday, we get the BOJ meeting minutes, UK retail sales, and also Canadian retail sales. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you with another macro watch next week. So traders, don't forget to catch us on the next FX Explain macro watch and all the great content on fxexplain.co.uk.